Time to look at that and more in the business news. Stephen Carl is with us in studio. Stephen, you've been looking at the market reaction to that announced that Gary Cohn is stepping down.
That's right. He's a former banker, he's pro-trade, he's anti-tariffs, and he was seen by many investors as being the market's man in the White House. As a result, there have been some ripples on the market since news of his departure broke. First of all, looking at the currency markets, the dollar down against the yen and the euro in trading today, $1 trading for just under 106 Japanese yen. On the stock markets, European shares opening in the red. The fear here being that with Gary Cohn gone, Donald Trump is more likely to impose those tariffs on imports, which of course would be bad news for exporters. That's hitting shares outside of the United States. Car makers all trading down today in Europe. They're one of the sectors set to be worst affected by these threatened tariffs. The falls even more pronounced in Asia in trading, a worry of course for exporters there as well. The Nikkei in Tokyo down 0.75%. The Hang Seng in Hong Kong down almost 1% there.
Meanwhile, Trump looks like he's determined to push ahead with those trade tariffs. That's
despite the pressure from within his own Republican Party and from America's trading partners. Donald Trump says he will be imposing a levy on imported steel and aluminium. House Speaker Paul Ryan had called for a narrower approach to tariffs to avoid a trade war. The European Union is set to lay out its response to Mr. Trump's plans later today. At a news conference with Sweden's Prime Minister on Tuesday, the US President was defiant.
The European Union has been particularly tough on the United States. They make it almost impossible for us to do business with them, and yet they send their cars and everything else back into the United States. And they can do whatever they'd like, but if they do that, then we put a big tax of 25% on their cars, and believe me, they won't be doing it very long.
Meanwhile, the head of the International Monetary Fund, Christine Lagarde, says that these sort of protectionist measures would have a serious impact on global growth, especially if other countries respond in kind to the United States. She said it appears these moves haven't been studied in detail by Washington.
Stephen, you mentioned there the car industry could be one of the sectors most affected by those trade tariffs, but there is, if we turn our attention to the Geneva Motor Show, there's another major challenge facing car makers.
And that's the decline of diesel engines. Major European cities have already announced plans to either ban diesel cars or implement so-called toxin taxes. The drive to reduce diesel emissions is already affecting sales. Toyota announcing earlier this week that it would stop making diesel cars this year. Catherine Viette has more.
It's a model of car whose days are numbered. Global automakers are scrambling to meet looming EU CO2 goals and avoid big fines. That's hitting sales too. In France, the share of diesel vehicles has fallen from 67% in 2013 to below 50% in 2017. And this year it keeps dropping further.
We think people are ready to give up gas cars and change towards electric. We're going to see that. Our plan actually is that we will have up to 30% of our complete fleet electrified by 2025.
The move away from diesel is also being driven by government officials. Germany's highest court ruled cities can ban diesel cars to tackle pollution. On January 1st, Brussels barred older models from its streets. Paris and Rome are aiming to do so by 2024 and Athens and Madrid by 2025. London and Oslo have already introduced a so-called toxin tax for certain diesel vehicles. Back at the Geneva Motor Show, Toyota announced it was ending the sale of its diesel models in Europe this year. Volvo says it will stop production in 2019, Fiat Chrysler in 2022, and Peugeot in 2025. Meanwhile, Renault says it will cut its production of diesel engines in half by 2022.
We consider that the future is going to be much more gasoline with electrification and even more pure electric vehicles.
Currently, electric vehicles account for just over 1% of the global market. But with sales growing by 50% a year, they're expected to quickly become a force to be reckoned with.
And finally, from Stephen for now, Coca-Cola apparently is breaking with a 125-year tradition with its newest drink in Japan.
The company is testing its first ever alcoholic drink as it tries to cash in on the huge Japanese market for Alco-Pops. The Financial Times reporting that the head of Coke's Japan business said they'd be experimenting with chuhi, which is the Japanese word for these kind of drinks. It'll be sold in a can like soft drinks. This is a big market in Japan, though. It's been growing steadily in recent years, according to one company's estimates, by up to 25% a year. So Coca-Cola keen to get in on that market.
Yeah, I reckon it's a big market actually across the world, to be honest. Those alcohol pubs, and quite a dangerous one too at times. Stephen Carroll, thanks a lot for that business update.